and gentlemen. Today is the 23rd of March, the Tuesday. And once again, there's no respite in the market. We're seeing volatility at its best. We're seeing random 50, 100 point moves that then get completely sold into. So 100 point very fast up move followed by a 200 point down move and then reversal and then heading back to the day's high. So it's been a very, very interesting time and very tricky to do intraday non-directional kind of trades. That being said, from close to close, we ended up doing a little better than 1% again on our capital. And there should be quite a few takeaways today in terms of how to deal with volatility. That being said, today we will not be having a data analysis segment. Ravi's a little busy, so that will continue from tomorrow.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So we've just entered our position for the day, and the idea for today should be very simple. We expect that 15,000 being highest open interest and huge amount of calls altered yesterday should be defended unless we see some big short covering, and that short covering has to come from Bank Nifty. It cannot be anything apart from a big up move in Bank Nifty that takes us closer to 15,000, which is why we have sold the 15,050 put. The reason we've sold the 14,400 call is the recent swing low that we made just tested 14,400 and bounced back. And yesterday we saw a good amount of support at 14,600 as well. So on the downside, there is quite a good amount of premium available on the 14,400 put. Now, the idea for today will be that in case we start breaking upwards towards 14,900, then we will move up our puts and move our calls away as well, so to 15,100. But most likely, we're far more likely to move up our puts than do anything from the call side. For now, we've gapped up and we're almost up 100 points from yesterday where we closed. We continue to make an up move. So these calls are expanding and we're not going to do anything yet. We're going to wait for some time for 14,800 to hold and then possibly move up our puts to 14,500. That being the case, today's day, we're expecting more or less to be range bound and we'll keep you posted. Okay, massive call side IV expansion. If you see, these calls have started going through the roof. So they expanded in the past 10 minutes from 27 to 40, 13 points. Same time you see what has happened to the put side. What has happened to 14,500 put in the past 10 minutes? It's only gone down from 39 to 38. So 2 points of reduction on the put side, as the calls have expanded, 13 points. Now this is an IV expansion. Can't do anything about it. One good thing about IV expansion is that further out of the money options will then still have a high amount of value. Like right now, 15,100 call is trading at 29, which is really good. So we'll have to just wait out some of this IV to start deflating. And if it doesn't, and if we see a continued up move, then we will be moving away these calls. Also, to somebody wondering about the changes in position sizing, the reason for a different position sizing today is that our hedge is much further away. Today our hedge is 900 points away on the put side and 350 points away on the call side. The reason for this is we were losing a lot to hedging itself. So it's okay to keep our position size smaller and use further away hedges as long as the premium spread is not that good. So that's the plan for now. Anyway, a spread like this, if we do continue to remain sideways from here, should give us a good 15-20 points of decay by the end of the day. So that being the case, actually from here, considering the IV spike, probably more as well. Okay, so now we're seeing a slight dip back to 14,800. Luckily, the put side IV isn't spiking and the call premium has come down considerably without much of a change on the put side. So that big fear spike that we saw, which started seeing all the calls getting covered, now that is starting to neutralize a bit. So that being the case, what we will do is if we hold below 14,800 for a while, then we will once again consider moving down maybe part of our puts to 14,400. Okay, the time's 10 o'clock. Basically held below 14,800 now. And what that is doing is it's not expanding the puts, but it's really brought down the calls, which is good because these puts have been stuck between 37 to 40 forever now. And yeah, that call side fear has subsided. What we're going to do is, for now, we are going to hold our position exactly as is. It's well balanced, it's almost centered, and we will see a test of 14,750 to roll away half the puts lower. And if we break below 14,750, then we will move the rest of the puts lower. Until then, no plan of action as such. So yeah, interesting early morning spike on the call side IV. Luckily that has subsided completely. Okay, so now we tested the day's low and basically tested the day's open, yesterday's close and whatnot. We didn't go till yesterday's close, and basically slightly above 14,750 is where people are not willing to make up their mind. So now the calls have stopped decaying and the puts are inflating slightly. Plan is very straightforward. We see 14,750 on the spot, which basically means then we are testing yesterday's close. Then we will close off half these puts and move them down by 50 points. And if we then start breaking down and we hold below 14,750 and or make a 20-point move below 14,750, we'll take off all of the puts and move them 50 points lower and keep the calls exactly where they are, because now these calls will not lose too much value, because once they are below, like for example 1550 is below something like 25, there'll always be that fear of short covering where which is why these calls will not go down in price. Okay, so we're testing 14,700, yesterday's close. Seems to be some kind of demand from there, but regardless, to risk manage, we moved about 9,900 quantity to 14,400 and retained 6,900 at 14,500. Now the idea will be, in case we start heading back up towards 14,800, we will move these puts back up to 14,500. We're basically balancing the kind of cascading risk we would have had on the put side by moving about 60% of the quantity down. And yeah, for now we continue to hold. These options have to expire on Thursday, so there will be continued loss of degradation of value over that period. Currently we are on a 650 point and a 550 point triangle and very attractive values at 56 and close to 70 plus on the 550 and 56 on the 500. So yeah, we continue to remain range bound and premiums continue to be inflated, so we are going to continue to hold this position and see where it goes from there. Yeah, looks like some kind of pullback from 14,750, and that's good. We still benefit, but we benefit less because we moved on our puts, but that's fine. We did not want to take the downside risk, so we will not get the upside benefit on reversal. Okay, what we've done is we used this dip, this red candle, to actually take on for the put side risk, where we've moved all our puts back up to 14,500. The reason for this is there is some mad strength in Reliance, and Bank Nifty is flat as well, and it looks like there is right now, if I were to look at Bank Nifty and the amount of put writing that is happening at 34,000, I would expect to make a new day's high at some point of time, and at that point these calls will bleed, and that's why I want more put side credit. Reliance is extremely strong. Bank Nifty is going to get stronger is what the hypothesis is, so we will have a upside bias and we will take in the put side trade. So what we did was using this red candle when the puts expanded a little bit more to shift out of these puts and move them. Yeah, that's the plan for now, that the market at this point is looking very strong and our position has a slight bias to the upside. Okay, so we were expecting the up move in Bank Nifty, but now 34,000 should act as a ceiling. Now if some short covering rally takes us 400-500 points from here, that could be extremely problematic. what we did do really helped where we imbalanced our puts, but now these calls expanding will start to be a problem. So the idea is if these calls start expanding to 40-ish, then we will and move to the 15,100. We're gonna anyway move half the quantity for now. 1500 is available for 27. Okay, about 60% of the quantity. Good enough. Massive green candles on the back Nifty. We'll have to see where things calm down. Huge spike on the upside. Okay, some kind of supply coming in at this point of time. So here, what has previously acted as a resistance is seeing supply. Anyway, we balanced our position now, and what we did was square off 9,900 quantity and move it higher, 28. Now we have a strangle which is split between 14,500, 1550, 14,500, 15,100, and for now this is kind of balanced but definitely biased to the downside. So yeah, big IV spike obviously, but still quite far away. We are still very far away. Yeah, 300 points away, 300 and 350 points. So 200 and 250 points on the call side. So we will see if we start heading and holding over it 14,850, then we'll move the rest of these calls here. Might also consider moving the puts to 14,550 or 14,600 depending. Okay, the reason we've done the quick adjustment was to protect against some continued short covering. The fact that short covering didn't continue and we took resistance and now we're heading back to 14,800 means that we have booked the 15,100 call and moved it back to 1550. Once again, we managed our risk on the upside. On the reversal, we didn't benefit completely of the reversal. We benefited only partly. And that's the entire idea. In this entire trading structure, I'm here for the in-between, not for getting some big directional trend, right? So yeah, the upside seems to have been limited at 14,850 plus went till 14,870, I think. And then from there we've been sold to. So that being the case, call side IVs really did come down, which means we still benefited about close to 7-8 points on the higher away strike as well. And now we have the entire position back to being a 550 point triangle, which has 60 to 63 points in it. So this being the case, we'll more or less hold on to this exact position unless once again we start seeing a test of 14,750 and start heading to the day's low, in which case we'll be risking off on the put side. And if we start testing the day's high, we will be risking off on the call side. That will continue to remain the plan. Very interesting up move. We stopped out a lot of people, but yeah, we were expecting something like that. Okay, time is 11:30 and the entire up move has now been negated. And yeah, Reliance dipped to the 2080 range. 2080 has been point at which Reliance has multiple times taken support and resistance. Anyway, Bank Nifty, that up move seems to now be completely negated more or less, and on the Nifty we're now heading towards the day's lows. So what will be the plan now? We will roll down about we have to get these puts are just expanding now, and we will roll these down 14,400. Okay, what we'll do is we'll roll down half of these, actually then around 1/3 of these. Okay, so we have rolled down 2/3 of them to 14,400 because now clearly some kind of breakdown is happening and everything is participating. Okay, very interesting day. Make this up move gets fully negated and all the longs that built up start to get unwound in this down move, and more or less we had to move away our puts to manage that. Now our puts are at 14,400, which is 300 plus points away. So we have some comfort in that. We will wait for 14,700 to be breached and then some kind of a down move from there to then further adjust on the put side. We will also now look at what kind of pricing we're getting on the 15,000 call. 25, quite good. So we will roll down our calls to 15,000. About 1/3 our position is at 15,000. Okay, so all of our puts are at 14,400, 1/3 of our calls are at 15,000, and 2/3 of our calls are at 1550. This gives us slightly bullish positioning, but considering that we're at the day's low, if we again start heading towards the day's high, the calls will really expand, and that will be a really shitty position to be in. We will wait and see if there is some kind of buying that takes place from this level, some kind of bounce from 14,700. So in the next 10 minutes, if there is no bounce, then we will move down the 1550 calls to 15,000. Okay, so what exactly is happening? Bank Nifty tested yesterday's close and is taking support back. So what exactly happened is, because of whatever good news they thought came from Supreme Court, some kind of short covering rally triggered and probably a lot of longs were built up at that point of time, thinking that we're going to go to 15,000 immediately. That didn't happen. That started to sell off. A lot of those longs created then started to get unbound, which is why we saw the big dip. Now that unwinding is probably halted around yesterday's close for Bank Nifty, and yeah, same thing for Nifty. So our position right now, as it is all right. It's well balanced. It's slightly biased to the upside from here, and we will continue to keep this view. Tricky day. People would have got stopped out on both sides easily. Okay, so we're not seeing the dip immediately get bought back. What's happening is now our risk is imbalanced on the put side. It's still very far away. So what we're going to do is we're going to wait for this low that we just made to be tested. And if we test that low, we'll move the remainder of the calls down. And that should give us good spacing. We are 350 points away on the put side. So we really don't have to be that worried. Whereas one more round of short covering up move, now that the calls are so cheap, will completely blow up the calls. So that's the concern. We'll wait for the day's low once again to be tested towards 14,700, and we'll move down the rest of the calls. Okay, we're getting decent pricing now on the 15,000 calls. So we're going to use this opportunity, the expanding 15,000 call, to actually move our calls down. Yeah, so we've used this to move our calls down. What's happening is we're in the range of testing the day's low and seeing light green from there. So in that time, while the 15,000 call continues to expand, we have moved down our calls. Because after all that short covering, we didn't even get past 14,850 clearly. And now in this down move, basically doing what? We're giving up our excess upside bias, but taking on more risk of some kind of big short covering happening. Okay, we're basically as balance can be, and just a couple of points here and there. Right now our calls are only about 270 points away. Our puts are 330 points away, but that still gives us a good range. And despite the good news, the fact that we didn't see some huge short covering on the Bank Nifty looks to be extremely sideways and seems to have very limited upside, at least for this expiry, about 34,000. And yeah, that's why we've now had the more or less the idea to sell the 15,000. So right now 600 points, trading for 59-ish roughly. Okay, so looks like some kind of support taken towards yesterday's close, and clearly that support has held, so we did not see a further breakdown. And yeah, we moved above 14,750. So using that as a good enough reasoning, we have moved our puts to 14,500. Now we have a 14,500, 15,000 call, and right now what is going to happen is if what is happening all day continues to happen, then we will see wild 50-point moves and reversals. So to not get carried off by that volatility, the only change that will be made to this position is if we move up over 14,800 and hold there for a while, like by at least 20-30 points, or we head to 14,700 and hold just slightly above 14,700 for a while. In that circumstance, we'll make a change. So 150 point up down range is what we're keeping more or less. And in that range, we will not make any changes because it will just backfire on us. Okay, the time is almost 1 o'clock. We saw some kind of a push towards 14,800, and now that's started getting sold into. Our position continues to remain balanced, and yeah, I didn't record this. I skipped recording this, but basically, no buyers for this. What we have done is whichever stock options are expiring in this month, we have rolled them to the next month. We have exited our April future on HDFC and exited the March future on HDFC and entered the April future. We also sold a call at 2,800, and we consider these basically shares that we're holding. So it's not a very aggressive trade. It's just a very passive sort of a trade. ITC as well, we closed our position. We closed the 215 call and the 215 put. Both of them did decently all right. And to cover our ITC future, which was already in April, we sold the in the money 2020 call, and we also sold a cash secured put sort of a situation of 220. And this has a good amount of points. It has about 17 points plus. And to get a little hedging benefit for 70 paisa, we purchased the 190 put. In case there's a drastic down move and these expand to 3, 4, then we will immediately book the profit on the puts and then roll the calls in the money. So these are the only HDFC and ITC needed anything to be done. Nothing needs to be done to Bank Nifty since the margin won't go up either. This future, which we had previously rolled forward at a very expensive price, took quite a bit of damage. At that point, our cover was at 35,000. We doubled the quantity at the cover when we saw that Bank Nifty was basically trending down. And we also yesterday took in some put side credit. And basically, if you see between the future, whatever damage has been taken has been covered by the options. And these options are expiring along with the future this weekend. So we'll roll forward the future towards Wednesday or Thursday and also book all these options and enter covering options for the next month. We'll roll this also forward to May. Reliance, we already rolled forward last week when there was violent moves. So for now, all of Reliance is already in April. And at this point, we no longer have any March-based positions, and we've rolled everything to April. So our margin will not go up. Yeah, that being said, right now, market continues to be in the range, and the 500 point triangle continues to have about 67, 68 points in it. And yeah, that's still very attractive pricing. Of course, the volatility is through the roof, but we are continuing to hold this position. It's almost perfectly centered. Okay, so just to show you what it looks like. ITC position looks something like this. I've removed all the March positions. So ITC position, as long as it stays above 2020, we make the same amount of profit. Even if it goes slightly lower, more or less the same amount. We'll have to adjust if it starts sliding below 220. This is our Bank Nifty, which is expiring this week. So there is good amount of DK left in quite a wide range. So we'll continue to hold. If we start sliding, breaking below yesterday's lows, then we'll start cutting some of our downside risk and probably carry it to the next week as well. So that's how it's looking. We also have this Nifty future that we have to roll forward. So the Nifty covered call that we have to roll forward, this and this, and the Bajaj Finance covered call that we have to roll forward. I'll get around to doing that towards the close of today. In the last 5 minutes, I will roll that forward as well. Okay, it's pretty big amount of volatility today. Like, people would have become quite frustrated. This massive short covering move that moved 100+ points and then got sold into by almost twice that much. random formation of massive 50-point candles, and then reversal. So yeah, I mean, the only thing is that's why you need to have criteria to say you're going to stick on to a trade until its criteria is met and then you get out. Otherwise, it's really going to have a roller coaster, especially on days like this. So it's about 140, and currently our strangle is trading at slightly above 60. And what we're going to do is if we head to the day's low, then we're going to completely risk off on the put side. But until then, we're just going to continue to hold because obviously a big up move, these puts expand and then now that gets bought into, these puts deflate again. That's why we have a balanced position, and eventually people who have gone both long and short will have to exit towards the end of the day. Today being a Tuesday, tomorrow one day will be left for the expiry. And yeah, it's currently the situation. That's the entire thing is we're not adjusting easily. Otherwise, we would each time be adjusting and losing on that adjustment. Yeah, we continue to hold and keep you posted. Right, Ricky? I'm sure many people got stopped on both sides. Okay, so now that big red down candle is weak outright, big green. Now this changes things slightly from psychology. Now this breakout here above like 14,820 will be dangerous on the put side, on the call side, because this is a very bullish formation to try to smash it down, and yet it was bought back. So that just shows you, I mean, of course, highest likelihood is they continue to be sideways from here, but now this gives a lot of confidence. First of all, we're doing higher, higher low from the day's low, and then now this big dip which got bought gives a lot of confidence for people to now go long and then hold long positions, take BTSD positions, that kind of stuff. So now we'll have to be a little more concerned on the calls expanding. Nothing immediately, but if we start heading another 30 points up from here, we'll start to risk manage the call side. One more thing is the tips are being used to write immense amount of puts. So clearly the downside is firmly in place. At this point, I would say 14,500 is definitely the lower ceiling. I mean, 14,500, 15,000 what seems to be the ceilings for this expiry, but too early to speak, and lots of intraday volatility. So yeah, fun times. Okay, so what I've done now is I've moved about 60% of the puts to 14,550 because this threat is very real now, this up threat. So I'll have to be very careful with the call side. In fact, I'm gonna move up all the puts, and yeah, we're gonna have to be very careful now with these calls expanding. These can gain 10 points easily if we make a move towards 14,860. Start heading towards the day's highs again. These will easily gain 10 to 15 points. So. Big spike in IV obviously on the outside. Okay, so let's see how much steam there is going to be in this. It's mainly coming from everything moving at once. Fact, Nifty, Reliance, IT, the whole market is moving in one direction. So we don't want to too aggressively move up our puts to 14,600. Then a reversal and make our puts very close, and which have deflated now, they will expand rapidly. So what we'll do is probably, if this continues, this expands to 42, 43, which will, what will happen if we head to 14,850, we'll square that off and move them to. Okay, so there was a massive expansion on the call side. We got out of the calls, we bought them back, and then we sold the 1550 call. The idea is we were sort of afraid of this kind of a situation happening, and we could have prepared for it better by potentially having taken in more put side credit at that point of time. But yeah, the nature of volatility, we didn't want to do that, and that's fine. So at this point, the idea is there is still about 1 hour to go, and there should be a good amount of decay remaining in both of these strikes. These calls expanded immensely due to the IV. Right now we are 200 points away. So yeah, good enough for now. We are 300 points away from the put side, and we are 200 points away from the call side. And that spread is trading at a pretty attractive value. Had we positioned ourselves a little more aggressively to kind of protect against the up move, we might have done better. But then again, today's market is very random, so it's difficult to try and pin it down like that. And potentially, if your view is wrong, you can take some damage. And since the idea is I'm just here for the decay in between, I will not push my view too aggressively into the trade. Okay, so against the continued up move, it moved up 1/3 of our puts. And now maybe the call side IV is starting to come down. Maybe this rejection holds. Not too sure, but if this rejection holds, does it cascade again? Once again, a bunch of people getting out, those who have gone long at different points. Very tricky day. Not an easy day. Yeah. At this point, once again, idea will be if we start breaking up, then we will move the rest of the puts here, and if we start breaking down, then we'll move these puts back here. 14,900, 14,950 should still be a very big resistance, and Bank Nifty needs some different kind of move to pull us to those levels. We need to see like Bank Nifty 35,000 to look at 15,000 on the Nifty, because Reliance once again headed up to 2,100, took resistance there and start sliding back down. Still only about 10 points away, but looks like not too much upside beyond 2,100 for Reliance. Okay, I had to make a bunch of changes to the position. We'll just go over it. Basically, what happened is my hedge was too far away, and that was not letting me move up my puts with my margin. So what I did was basically moved in my hedge, and for that I had to exit out completely of one side and then enter again and then rebuy the hedge and whatnot. I'll be trading my trade log on the group, so you all can check that out. What we've done is we moved closer because around this range we are getting very good premiums, and we wanted to move closer, so we moved closer by close to 150 points on the put side and by 50 points on the call side, so that in case those puts start losing, then the calls will cover it. So that's what has happened. I'll just go to position 1 second. We're just setting arbitrary stop losses on these, which are against like a quick and rapid move type of a situation. Okay, calls are really crashing, puts are kind of expanding. Also, we have now basically, since we have moved closer with the hedge, we have also expanded the volume. So we'll increase our quantity because our hedging is now better, so we'll get better margin benefit. Now the idea is we're in the last half an hour and we're doing quite well on our mark to market. So we will set up exit orders on sensible. So if our mark to market starts heading lower and starts heading to like 130, then we will hit exit on everything. Okay, what's happening now is the call side IV is really crashing. So these puts are expanding, but the calls are deflating more than what the puts are expanding, which means that many people who have gone long on the calls are starting to dump them, whereas this dip is being used as an opportunity. This particular dip that we're seeing is being used as an opportunity to write puts, because which put side IV is not spiking, and even those who have bought puts are probably booking those profits, which is why now the net position is gaining, and we have our we have our 5 orders ready to exit, and now our stop loss will be 180. So if we see 180 on our mark to market, we will just get out. But if it's 180 due to balancing, then we won't. If it's 180 because we are seeing a down move and the puts continue to expand, then we'll get out. Because this entire time fear was on the call side, due to which the calls are crashing, and a down move, in fact, actually, despite the imbalance in premiums, is benefiting us. Okay, we are getting kind of screwed now with both of them expanding. So what we're doing is we're going to start cutting the position. We don't want to see some kind of a last moment thing, take away everything after having such a... Oh great, this is what happens. Some orders rejected. Okay, trying to manually get out. Oh, of course they got rejected. We had stop loss. That's my mistake, not the mistake of sensible. Okay, we're going to get out of the call side and try to trail from the put side. Okay, so all put together, finally we closed it after all slippage and whatnot at 130 for the day, which is fine. I mean, I'm just glad that I didn't get caught on the wrong side of volatility today. Very interesting day overall, and I'm quite sure today was the kind of day when many people could have easily got burnt. That being said, this has become the new normal in our markets, and our trade needs to sort of keep that into account. We will not be having a data analysis segment today. Ravi is busy with some other work, so we'll be back tomorrow. Thank you so much for watching, and I hope you had some good takeaways from this. Also, I'm going to be sharing my trade book right now on our channel. Okay, one more thing. Basically, going to exit the covered call on Bajaj Finance. This we can roll towards the end of expiry. Okay, so have shifted the Bajaj Finance position here, and yeah, basically done for the day. And on our initial sizing, less than about 10 points. Towards the end, we increased the sizing and all kinds of things happen. What a day.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.